Good morning students, welcome back to today's class. Today we are going to see Accountancy chapter 7 Depreciation, Provision and Reserves. This is video number 1. So in this lesson we are going to see some new terms. Most probably these terms you are hearing as first time or especially its meaning. Even though you heard sometime, you may not think about its meaning, what is actually it. Those things are that depreciation, provision, reserves. So first of all that we are going to see that what is depreciation. After that we will come to that provision and reserves. So you know that in business or even in our houses or in school, everywhere we need some certain assets. We are making use of certain assets like land, building. If our house, that is one asset only. If we consider it good house, then its value is that much good. Then we consider that is as asset itself. Or if you have vehicle, that is also our asset. And at your home, if you have furniture, television, this all we consider as an asset. And in school, if you are taking example, you know that here whatever the things we can make use for more than 1 year, which all we brought here, and its value is something different. Means you know that this we can use for more years, but we are not considering this as an asset. This we consider as just duster itself, because its money is not much rupees. You understand? Its money we consider as a stationary item. Clear now? If you have gold, that gold you know that may not be in this size, but its value is high. So we consider that gold as asset if you have that gold with you. You understand now? Difference you have to understand that while we are assuming that asset, this all is assumption only. We cannot exactly measure, okay, its size is this much. This is not asset. Then gold, maybe that weighing is at the same weight. With the same weight, gold is there. Then we cannot consider that okay, it is considered as that stationary. Then that gold also can be considered as that stationary. No, because to get that much quantity of, that means the same quantity what it is weighing, the same quantity of gold, we need to pay more money. For this maybe maximum 50 rupees maximum. You understand now? So price is also very important thing. That means the things we can make use for more than 1 year. 1 year means yes, 12 months period. More than 1 year, and which value is also something. You understand now? As I said that example of duster, maybe this is 3 years old, but we never consider this is as an asset. You understand no? Because its value is very less. That is why the accounting rules and regulations or generally accepted accounting principles are saying that materiality concept. If immaterial things, how we are deciding material or immaterial based on that its value. You understand no? But we can consider this board or this projector, all we can consider as an asset itself. That means its value is something different. Clear now? Mainly we consider that based on that value we assume that this is asset, this is not asset, or this is stationary. Clear now? So here you can see that at your home, school, or all the business, in all the places we know that certain assets we are using. That means in school you can see that the building all is considered as an asset only, and land and buses like furniture, fan or projectors, blackboard. This all we can consider as an asset. But you know that when we are making use, there is a time period is there. Even though we can make use of more than 1 year, but we cannot use it for very long time. You understand, no? Even that the building, this building, you know that very good building, no? Very strong, constructed with that stone, sand, cement, and steel. Everything is used, and good engineers made that plans. But even though you know that after some years, it may be 50 years, it may be 75 years, it may be 100 years, almost some time is there. No? After that time, we cannot make use of that. Understand? No? So, when we are using or when we purchase it, you know that this table, when it is purchased and maybe brought before 3 years or 5 years back, then you can see that it is extremely new, no? And there is no any damage. Now you see that there is some damage, some colors are gone, no? So by the usage, what will happen? Automatically the value will reduce. Or you expect very easily, you can understand with that electronic items. For example, if you purchased one mobile, okay, for example, this I purchased with I think 14,000. If now I am going to sell this mobile with the same 14,000, how many of you will interested to purchase this? No one of you will interested to purchase this. You understand now? Means when I use it, its value is reducing. It is considered as the second hand. You will not get the same value. The usage value is there. The same concept only we apply as the asset here. We call it is the term depreciation. Means by the use of time, or when we put them in use, or simply we kept there. We purchased it, but we didn't use, but time is passing. If I use this mobile or not, that is not the matter, no? Once if I purchase it, I said that this mobile I purchased it 3 months back, but I didn't use it. Even though that value is reduced, it will be considered as a second hand only. Clear, no? Whether I use or not, time is passing. You understand, no? According to that, value is reducing. This process we call in accounting as the depreciation. Clear, no? That means for the asset, by its usage, when the value is reducing. This value is reducing means we cannot see that value is reducing. Where this value is reducing? In the books of account. Clear, no? That means most of the things you can see that after the use, if you are selling that, if a house we constructed, we use it for 5 years, then we cannot get that, or we cannot demand it is in the first year how much. That means immediately after construction how much price was there. The same we cannot demand. It is not sure that the person who will purchase that is in the same price. According to that usage, the value will decrease. If a good house or building which is constructed maybe 10 years back, then according to that its value will be what was its original value, or from there, or what may be that with compared to another one building, the same like that another one building, how much was the cost, the same nobody will give. They will consider that this is used for 10 years, So according to that usage, the value will reduce. This concept we call as the depreciation.